Hi there, traders. This is Brad Goodwin with the Daily Market Insight for Tuesday, the 18th of July. All right, now, no surprise, the dollar move or the dollar down move from last week has slightly stalled, right? And that's to be expected. There's been no follow-on major data releases, and we are now waiting for the key releases. And today we've got US retail sales, industrial production numbers, and they could provide a bit of a spark. But there's a few other things before that. The Aussie RBA minutes and also Canadian inflation numbers the same time as the US retail sales figures. Now, at this stage of the week, right, this is where the week really starts, right? Put a line through Monday. We had some weak Chinese numbers, which pushed Aussie and Kiwi just down a touch, but nothing major. And now we are starting to build anticipation around potential moves in these instruments. Now, you just need to be able to follow what's going on. But first and foremost, just sort of recognize where those short-term trends are. Like the dollar index, obviously down, euro up. Gold's had a nice move to the top side. And oil, well, it's almost topped out here. We're leaning right on a good support trend. Like as a general trade, that's probably got one of the best technical setups, oil at the moment. Now, the equity markets, well, they are liking the potential for sort of a less of a, or topping out of the US interest rate hiking cycle. So they are sort of just cruising topside, which you would, as you would expect. And if anything, it goes into a little bit of anticipation around today's US numbers. I'll tell you what, by the way the equity markets are trading, they're like the market already knows that they're going to be weaker numbers. The cryptos or Bitcoins sort of back down below 30,000, but you come into the major currencies, and this is where, okay, major currencies, great for when the US dollar comes out. Of course, for independent data as well, but sometimes you don't want to get too caught up in just the dollar trade, right, against these other instruments. When we have a really nice technical setup here on the dollar index, dollar yen, but there's a few things going on here, right? The carry trade's still there. I know the BOJ have put a little bit of a soft tone in it. We've got the dollar weakness. Okay, there's almost too many little things going on, whereas dollar Swiss, like the dollar index, is heading down. A little bit of discombobulation here in dollar CAD. And I'll come back into this when we start looking at the inflation numbers. But you're starting to get, slightly better numbers yesterday out of Canada. The wholesale trade numbers, okay, slightly better. So dollar has drifted lower. Oil's sort of falling. So that sort of puts upward pressure on dollar CAD. But then you got dollar weakness, right? There's about 3 or 4 different variables there in dollar CAD, which makes it a bit tricky. Euro, well, it's cruising topside, but sort of just drifting sideways. Once again, this is extremely normal, okay? You're waiting for the next input of data to get the momentum moving again. This is the same for sterling. It's just drifted through that very short-term support line. Aussie and Kiwi, well, they're following the euro and sterling, but once again, those weaker Chinese numbers yesterday are a bit of an opportunity there to tuck in a small amount of cash if you were in front of the screens. So that's the picture. Now, when it comes down to the sort of key releases to what we have today, right, you're looking at, well, there's a couple, as I was sort of saying. Let me just get onto the right page. Now, the RBA minutes, okay. Now, we did see a bit of a move last month on the RBA minutes. Now, I think they've got to be thinking that things could be topping out. So, dovish would go with the current trend on a lot of the crosses. Then you've got the Canadian inflation numbers. And before you sort of start to sort of think, well, which one of these numbers should I be looking at? Well, this calendar in particular gives you a bit of a heads up, the year-on-year numbers, but it is the year-on-year and month-on-month. Now, if you weren't sure of that, okay, the easiest way to sort of work this out is come into the Bank of Canada website, right, and go into their recent statement, and you can come back down here, and they do talk about what the recent number, okay, they refer to it, what the recent number was, sorry. Inflation in Canada eased to 3.4% in May. So you're thinking, okay, 3.4%. So what are they talking about? Then this is the tricky part, because if you didn't realize that it was this number, right, you can start to get a bit caught up in the Bank of Canada got their own core numbers now and all this other crap. So really, it's these ones here. And most importantly, the 3.4% is what they're referring to, right? So that's the number that we look for on the Canadian inflation numbers. And whilst we're here, just to give you a bit of a dip down, you'll see the US retail sales figures come out at the exact same time as the Canadian CPI numbers. If anything's a little bit easier, the industrial production and manufacturing production numbers come out 45 minutes later, right? Makes it a bit easier. It's almost a shame that the US retail sales figures are at the same time as the Canadian inflation numbers there. All right, so with the now let's just have a look at the opportunities today, right? And this is where I'm trying to really guide you into what I see as where the opportunities are. Okay, now we do have a screener being built, but for the short term, this is what we'll do. So we've got the RBA minutes, right? This is a high impacting event. Now, if we get a dovish call from the RBA, I'm thinking the Euro Aussie, Sterling Aussie, and Aussie Swiss are the pairs to be really focusing on. It goes with the trend, right? So the black numbers, or the words in black, or the instruments in black, I should say, with the recent trend. So there's a potential for a follow-through move, like a full take profit on your trade plan. If you're looking at a hawkish outcome from the RBA minutes, well, it's against the recent trend in the instruments. So, but that doesn't mean there's not a potential trade. There is, but it may actually only be a short-term trading opportunity. And that's what these instruments in orange are, okay? Potential short-term, but the real easier move is on the ones that are in black. All right, so with the, and this follows through to the Canadian inflation numbers. Okay, it does come out at the same time as the US retail sales figures. So if you're trading dollar CAD, it can be tricky, right? But if we got, you know, if you got weak Canadian numbers, right, and we got a high dollar outcome, high retail sales outcome, well, then dollar CAD would be a good trading opportunity, but you've got to think quick, right? If anything, it might be a situation where you do have a potential pending order in the market, okay, above the market. So, but just factor in, you're thinking, well, Canadian inflation numbers, they're pretty important, and we could see some sporadic moves here, okay? So the coming back into that, so if we get a low print on the CPI number, okay, Euro CAD and potentially dollar CAD. Once again, dollar CAD, though, against the trend, maybe a short-term trading opportunity only. If we get a high print on inflation, which is against the general move in inflation in Canada, then potentially Sterling CAD and CAD Swiss would be the ones I'm looking for. But once again, potential short-term trading opportunity only. It's against the general trend. Now, the last but not least, when you come into, okay, you got US retail sales and industrial production numbers, but we know industrial production is 45 minutes later, makes it, as I said, an easier trade. And don't forget, we are looking for decent variance here. And these numbers here, I would consider medium to high impacting, right? Depending on the level of variance. They aren't like inflation numbers or a central bank announcement, which have a higher direct impact because it impacts the central bank policy. Don't get me wrong, retail sales and industrial production numbers are a major building block of the economic background, but they aren't the be all and end all. So, but we get low numbers here, right? It goes with the weaker CPI numbers we had last week. It goes with the downtrend in the dollar. So to me, the dollar index, dollar Swiss, Euro, Sterling, and US equities would be the ideal trading instruments. Obviously buying equities and selling the dollar against the other instruments. If we get or not strange, but a high print, well, funnily enough, a lot of these pairs are still in play technically. Dollar index, dollar Swiss, Euro, Sterling. There's a potential for a short-term, once again, a short-term trading opportunity, like a short-term correction, right? The market's piled into the dollar on the weaker inflation numbers, and so they should, because it's directly related to the Fed statement and what the Fed are going to do about interest rates. But this number here, it could just create a knee-jerk reaction and flush out some weak positions. And that's what I'm saying. The dollar index, dollar Swiss, Euro, Sterling, potential trading opportunities there. Now, so that's my take on it. Now, don't forget, I'm sort of calling the picture here, the RBA minutes, well, they're in just over an hour and 20 minutes. Canadian inflation numbers and US retail sales where they're, 12, 13 hours away. So there are things that can change, and especially with dollar CAD, right? So let me just explain what I mean by that. And if I just bring you over to the dollar CAD chart, and this is where you do your homework and you understand what's going on, because there are a number of things going on here with oil and dollar CAD. Now, try and stay with me here. So I've got a trend line here on oil, right? And oil is the light green number here, and I've got the scale inverted. Okay, so when it is when that green line's going down, price of oil is going up. So as you can see, the price of oil is falling here. So and the direct correlation here between oil and dollar CAD is super strong, right? So if we start to see oil fall further and sort of down through $74, that's going to put upward pressure on dollar CAD. Okay, so that's not a bad thing. So if we get strong retail sales figures and oil is falling, then you're going to see a spike up in dollar CAD. And if that coincides with a stronger CAD inflation number, well, I tell you what, we could get a decent move. But there's a number of different variables here that you need to be able to juggle. And sometimes when you are trading and you're looking at different opportunities, that could be enough to put you off because you want something a little bit easier. Right, so if you are trading dollar CAD, just be aware that you've got the retail sales figures, Canadian inflation numbers coming out at the same time, and you've got oil teetering on a major level. So that's why it can get a little bit tricky. Looking at the Aussie, okay, as I was doing, I'm just recognizing identifying the instruments where we do have major support and or resistance. Okay, it makes it easy when you've got clear entry levels. And with dollar CAD, likewise, there's there's a few things going on, but I'm really focusing on the instruments that do have potential here. And well, that's right. I can't rule out dollar CAD, but as I said, there's a number of, you need a few things to fit into place for dollar CAD to fit into play. If oil was already falling at the start of the North American session, I'd start to already anticipate, potential stronger US retail sales or even a US retail sales number as expected. And then if we got a weaker Canadian inflation number, well, then dollar CAD shoots to the top side. So there's a bit in it, but you've got to really work it out. So when you are doing your analysis, go through and hypothesize what happens if I get a strong CAD number? Where's the current trend? Where's the easiest trade? Right? That's what you're sort of trying to piece together as you go through your day. All right. Now, I think that's pretty much it. If anything, I'll just run through just so you've got it on your video. So if I go into News Score, you can actually get the ranges here, which is very important, the low and the high, right? So, and just keep an eye on these housing starts. The housing numbers, it's not just about housing numbers. It's everything that does. Building, production numbers and everything else is sort of factored into the housing starts. So just keep an eye on that number. It comes out a little bit earlier. The month-on-month number, expected 0.3, but the big donk number that we're looking for is this one here, right? Expectation 3%. Previous number was 3.4. And most importantly, the range 2.9 to 3.1. So a number lower than 2.9, they're going to sell CAD, right? And a number definitely above 3.1, well, they'll probably short-term buy dollar CAD, right? But this is where the trend is. A lower number here probably gives us a better opportunity, right? So make sure you keep an eye on that. And if I just change that to the US dollar, give you some of the US numbers, right? Okay, so US retail sales figures, also identifying the range here. To me, it's one of the key things that you need to know. Okay, so you've got a range and then also the industrial production numbers to boot as well. All right, so you got the retail sales month on month, 0.5. If you take out the autos, 0.3, but just keep an eye on these numbers, okay? It's where the action is, right? And as the news services are saying, they're sort of saying the dollar's stalled. Absolutely. And this is that's what you want. You want that move to stall. If I just focus on the dollar index here for a second, if this thing keeps moving, right, keeps dropping, we don't have entry levels right here. It's prime for a little like false break to the top side, probably before the number comes out. And then if we get weak numbers, it follows the trend and it gives us another real good push to the downside. All right. So that's how the markets work. We're waiting. The tension's building. We've got trend lines here in play. We've got the trend. We just need the numbers to line up. If they line up exactly the way we want, you make money. And that's what it's all about. All right, guys. Hopefully that helps. And, you can sort of churn out some dollars. Good luck, guys. All the best. Cheerio.